Hi, welcome to CMG RSK Forex Lecture. This is a weekly market forecast on DXY and then sometimes on gold. So we are not going to waste time. We are going to zoom in and then we do our analysis. So before we do the analysis for the seventh, in fact, the 8th week, we will have to have a recap on the recent week, that the 7th week, right? So on the 7th week, for the analysis for the 7th week, we said the market was going to be a bit unclear, a bit wavy, and then not knowing the actual direction of the market. But even though there's going to be some kind of consolidations here and there, I still had the perspective, the forecast, the prediction that the market is going to be bullish in general. So in the course of the week, in fact, the markets opened on, in fact, Sunday, Sunday midnight around 10:30 there. The market opened around this point, right? This is where it opened. So when it opened, the first candlestick that we experienced was a bearish one, right? A bearish one. And then the market started going up a bit, right? So Monday, in fact, Monday generally, we can say that we experienced some kind of a bullish day, right? So market opened here, we came down here a bit, and then we started going up to this point, I must say, right? So that was the market on Monday. Even though Mondays, I know markets is a bit one-directional and here and there, but we had not a massive move, but at least it was good enough. So generally, you can say that Monday was what a bullish market, right? Then on Tuesday, there was a massive news for DXY. So DXY, the same thing for US dollar. So if you are new here and this is the first time you are watching this video series, this is a weekly analysis that we do. And then in the course of the week, we give you live updates on our other social media platforms, especially Telegram. And then this is YouTube that you are watching at the moment. So we do this to give you idea of how the market is going to move like, how it's going to be, a general perspective of it, even though you have to do that with proper risk management. So we give you this a foreknowledge so that you know how you take your decisions in the market. So this is what we do. If you are new here, we have a number of weeks that we have done. So this is the 8th one that we are doing. You can watch from the episode 1. And then we have this playlist called the advanced one. So we have also other playlists for the intermediates, the beginners, and then we have other playlists for education, some random topics that are important for your journey. So this is what we do. So I think you must use this time to follow us on other social media platforms. And then please like and subscribe to our page just to show some kind of appreciation. That is it. So thank you very much. So Monday, we experienced a bullish week, not a strong one, but a bullish week. Then on Tuesday, there was a strong USD fundamental event. So we experienced this bullish market day, right? I told you market was going to be generally bullish, even though it might be shaky, not having a confirmed direction. But my general perspective, my prediction was that we experienced a bullish market. So that was what was happening initially from Monday to Tuesday, right? So Tuesday we had this massive, a strong bullish DXY. That was on Tuesday. Then Wednesday, right? Because I said I was experiencing, or in fact, I was expecting a bullish DXY week. When we had this massive gap up on DXY, I only thought the market was going to what? Pull back a bit. So pull back a bit, like up to, let's say, this area, pull back to this area, right? And then with this line, I call the EMA, right? In fact, this one is actually SMA. I think I've been saying EMA all the time, but this on this chart, on this account here, trading view account, is what? SMA. I have other strategies that I trade based on the account that I use. So I think I was confused and I was calling it EMA. This one is SMA, the simple one, the simple moving average. And then on the other one, I have the exponential or whatever EMA on other account. So I think that is the misunderstanding here. To just have this as a record. I have another account that I use the EMA. So I'm just developing some strategies for different accounts. So that is it. So now I was expecting a DXY to reverse to this point and then what? Start what? Moving up from this point. At least this point, it start going up, right? So unfortunately for me, right, the market retraced to this point, it failed, right? But before failing, I was updating. In fact, if you are on a Telegram page, you know that whatever I'm saying is true. So I was expecting that market would get to this point, right, SMA, and then move up. But when it got here, it consolidated for some hours, right? For some hours, in fact, for that whole day, right? For that whole day, it consolidated for that whole day. So I was still hopeful and then giving my people the information that they have to be what? Patient and then wait for a confirmation before they can actually what decide on what to do. So when a market goes to this consolidation area, unluckily, it failed, right? It failed. The bullish move that I was expecting failed. So market continued what? Coming down, right? Okay, continue coming down. But in this area, don't forget, in this area, when markets got to this area and then reversed to this area, right? I realized it was creating some kind of a fair value gap. In fact, this is a bullish one, a bullish fair value gap. So the bullish fair value gap means that it was going to give me that confluence of what? The market going up. But when it got there, it still remained in that fair value gap, right? So normally when prices get to the fair value gap, they what? They get rejected and then they start moving up again. Or if the market was going down generally, they start going down again. So that is the idea of fair value gap. So when we got to this area, or tapping into this area, it wasn't rejected sharply like the way prices do in fair value gap. It didn't move up. So I realized it was taking too much time than necessary. So my perspective began towards to change or become down. My hope in that bullish movement began to fail. I was kind of doubting, and then I had to wait more. So price got it and so came down again. But don't forget that it is still within the fair value gap. The fair value gap, this is the area in terms of this 1 hour time frame. The fair value gap is being created by this bullish candlestick, right? Behind it is another fair value gap on another time higher time frame. So don't worry yourself about this area. We are just based on this candlestick, given this fair value gap, right? So in this area, the consolidation or the prices remain in this fair value gap, right? So this is what happened in the course of the week. So like I say, always, if I say markets is going to be a bullish or a bearish in the course of the week, it doesn't mean prices will move linearly, right? It will not move linearly, sequentially in that straight line. There will be what? Retracement, impulsive retracement, pullback here and there. But if you are trading, you have to be watching and looking out for where the market what will start what relax on the movement, or where there's going to be a retracement. So when there's a retracement and you are not comfortable, because sometimes retracement can create some kind of consolidation, and consolidation can last more than necessary. So if you are not patient and you are not someone who swings, right, you feel uncomfortable and you start doubting. So for you to feel okay and then not doubt your whatever your analysis or your trade, then when there's a candlestick formation forming, when there's a candlestick pattern, a particular candlestick pattern forming, you have to look out for these things. Then you have to what, exit and then wait for another what proper what setup, another move. So this is how we trade. So even though market is going to be generally bullish or bearish, if you don't take precaution, right? If you're not careful, whatever you have gained in the course of the week or in the course of that day could be lost due to some pullbacks or long consolidation periods. So you have to watch that. So this is why I provide some solution and some help, right? Some help on my Telegram pages and other social media platforms. So that is what it is. So sometimes I may give you a prediction, you may get the profit in the early days of the week. Then middle of the week or you see, or at the end of the week, you lose them because you stayed in some trade more than necessary or you exited the trade too early. So that is why I often say that you must be following up on my pages or maybe even WhatsApp or something of that sort. So you have to be looking out for this. Don't stay in the trade for too long. Well, 1:1 risk to reward ratio, you are out. So that's what you have to be doing because you may be a good trader, but you lose all your money because you stayed too long or you stayed too short in the trade. So you have to be watching out for these things. So this is what actually happened in the course of the week. So now let's continue to our analysis for the pending week, right? Like we do always, we are going to do top-down analysis, right? So it's going to begin from 1 week chart, right? 1 week chart, and then we do the analysis downwards. So this is what we are going to do. I still have some of my lines drawn. I'm not going to delete them. So if you have been with me, you know what these things mean, right? So that is what we are, let me clean out do some cleanup so that we see what is happening on the chart. I don't want it too messy, even though I will still need some of the markings. I have to clean out some stuff. So let's do it this way. So on the weekly time frame, generally we see the market what moving in uptrend, right? The market is moving in uptrend. And then you see a fair value gap created here. Now, in this fair value gap, we are expecting, in fact, the previous week or the recent weeks, we are expecting the market will break this fair value gap, right? A fair value gap. This is a bearish fair value gap actually. So even though if it is a bearish fair value gap, it means that price one taps into it. That's our expectation, the general expectation for a bearish fair value gap. So when price taps into this area, what is meant is that we have the higher hope that the market would reverse. But in the course of the week, due to this bullish linear sequence upward movement of the market, we were still hoping that when price gets there, right, when price gets there, it will break this fair value gap and then we continue in that uptrend to this area, to this level, even though it might not take few weeks as we expect, but it may take more weeks or even a month or two. Right. Now, that was one aspect of my consecutive weekly analysis. I'm expecting a bullish week or month for some time. But I was still watching out to see where that perspective or that bias would fail. Right. So if you remember, right, I had this trend line that I drew, right? I drew from here to this area, right? I do that, and anytime I finish that, what do? I delete it when I have to move to the lower time frame, right? So this is what I was what I was expecting as a counter analysis to my initial analysis, right? So even though I was expecting, or I'm expecting a bullish week or a bullish month for some time now, I'm still looking out, or I'm still watching the market to see if it will fail. So if price gets there and fails, then our perspective will change for some time, and then wait if it will fake out or actually respect that trend line, and then our perspective for the next month or the period will change, right? If you have been following this is what I've been saying, right? So I am not changing whatever I'm saying. Whatever I'm saying is this, right? We are expecting the general bullish months or weeks, but then we are still looking out to see if this perspective will fail, because market is meant to happen. It is meant to happen for some time. You do your perspective, your analysis, and realize another thing comes in, and then that perspective changes. So it is normal. So I've not said anything different now. So with this trend line, right, this is in fact a bearish trend line, or in fact a resistance trend line. So it means that when price gets to this trend line, right, it is meant to what? High probability that it will reverse. So one here, right? Then we got here. Then we are going back, right? So when it gets here, now we have two confluences here. That is making the weekly time frame bearish. Get that into your head. I have two confluences, right? Two factors that is changing what my perspective for the weekly time frame to what bearish, right? One point here, another point here, and then even at this point, there's a fair value gap here, and this fair value gap is in fact a bearish fair value gap. It means that price will get there and then what fails, and then start what reverse. That's one factor, right? And then secondly, the price is also meeting this resistance line, or better say this trend line. It's meeting it, right? It's meeting it. So when it meets it, there's a higher probability that the market will reverse. That's one thing. And then the second thing is that even at the moment where we are now on this particular candlestick, right? Even though it is bullish, right? Even though this candlestick is bullish in nature, right? But in terms of anatomy, it is bearish, because look at where the market opened here, went up to this level, right? Went up to this level, which in the recent weeks we hoped that as price has what moved out and being that bullish, moving out of that this very fair value gap, right, breaking it up, then we were very hopeful that after closing we expect another candlestick to be what bullish and then continue that way. But when it got here, it came down again to come and close here, right, very close to the opening price, right? So if you look at this particular candlestick pattern, it's in fact an inverted hammer, right? A pin bar hammer. Even though this candlestick is bullish because it's green in nature, I symbolize my bullish candlestick with what? The green color, right? So it is bullish. By looking at the anatomy, how price formed, how that candlestick formed, it looks very, very bullish. Price has been what? Strongly rejected, meaning it has tapped into this fair value gap. And this fair value gap is a bearish one. So there's a higher tendency that market will reverse, right? There's a higher tendency that the market will reverse because it has tapped into this fair value gap, it is reversing, and then at this trend line, right, which is what resistance in nature, right? That is it. Some people even use the fact that if this trend line, right, meets this wick, right, at the 50% length of it, then the market is what? Meant what? To reverse. There's another strategy that I have. I don't really use it, but sometimes I use it as a confluence. So you see, so 50% of this candlestick, the wick, it has cut it, right? And it has also tapped into this fair value gap and has been rejected. So you see, so for the weekly time frame, this chart looks very, very bearish in nature. And bear in mind, our weekly analysis is done for a week. It's done over a week, right? So that is it. So it means that even though price may, the next candlestick may be bullish in nature, but it will still remain bearish around this area. And the week is in fact a long period. So we might experience a bullish, but the bullish will not come as early as possible that we may expect. So the bearish nature will be what? Reflecting. So that's, I've actually wasted time on the weekly time frame because in fact the factors are very, 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 very vivid here. They are very, very cogent here. So you have to be looking out for this actually. Be very careful. Now let me throw another caution and other attention here. Now, on Monday, we have a USA holiday, right? So the market is not going to be friendly. On Tuesday, they will not still be what? Friendly or a massive move in that, right? So market will actually come back or be restored on Wednesday. And on Wednesday, there's a major news for the USA dollar, right? There's a major need for the US dollar. So I can say that the market is actually going to what? Resume on Wednesday. So Mondays and Tuesdays, if you don't take care, you will be losing because price will behave like as if they are going to respect this kind of the bearish right move here because this looks very bearish. So we may be looking bearish on Mondays and Tuesdays. But on Wednesday, market will decide to what? Gap up, move up, and rally and break this resistance what? Trend line. So you have to be very, very careful. So what it means is that the following week, the market is going to be very, very indecisive. We keep using this term, right? Very, very indecisive. You may not know the direction. So maybe the direction for a strong move will come at Wednesday or after Wednesday. So you have to be very careful on this thing. Now let's move to, I'm moving to 4-hour time frame. I think we have wasted too much time here. The 4-hour time frame, right? Let me get this thing off. Confusion here, right? So the 4-hour time frame too. See what is happening. I have this trend line that I've done, a support trend line, right? So here we are still in that fair value gap. So in this fair value gap, it's a bullish fair value gap. So it means price could what? Move up and then break this fair value gap and start going up. Or better still, it may even come down at like for a long time. Because on the weekly time frame, it's very, very bearish there. So you could actually come down to, let's say, let's say even this level, right? Let me go give you another thing, right? So price could even so be bearish and move up to this area, right? Can move up to this area before going up because on the weekly time frame, it's very, very bearish there. So even if you are expecting a bullish week, price could actually move to this level before going up. So if you are very smart, you can benefit from both sides. When it is bullish, you can get some profit there, and then when it is bearish, you can get some profit there because it's going to be indecisive, right? But if you want to be patient, which I would always recommend, being patient and then studying the market for a very strong and a decisive movement, that is going to be very profitable, and then it will put you at ease and peace, right? So that you don't exit market or don't rush into market impulsively, right? So this is what is going to happen. And then let's go finally to, let me just get this one out. Right, before moving to the 1 hour time frame. So 1 hour time frame too, let's see what is happening here. On the 1 hour time frame, right? So on the 1 hour time frame too, you see that it is still in the fair value gap, right? It moved out and it has come back into the fair value gap, right? But when you look here too, even though we are in the fair value gap, there is this simple moving average here. So I told you I only use one indicator, technical indicator. I use SMA or EMA. That's what I use. When price is below, then I consider it to be what? Bearish. When price is above it, I consider it to be what? Bullish. I don't stress myself. I don't do too much analysis with this thing. I use this as one of my what? Confluence. Factors of what? Confluence. I use it, but not mainly the only indicator or the only decider for me in this market, right? So that is what I, so you realize that we are in this fair value gap or just below the fair value gap, but this price is below the SMA, right? So it means that it's still what? Bearish for me, which can be very bearish to maybe around this area. It's just 1 hour. So 1 hour out of a week is nothing, right? But you have to be very cautious because we usually trade 1 hour, 4 hour time frames and then 30 minutes and then below, right? Unless you are a swinger or yes, that one you decide to trade the daily or the weekly, right? But majorly, I'm a day trader, so my analysis is based on the day or day, like yes, the daily market movement, but have a bigger overview for the week, right? So that is, so when it comes to the 1 hour time frame, it's still below the SMA, and then we are in the fair value gap. Now, one might ask what is going on here, right? Look at, so you see that generally price is what? Very low, and then it's in the fair value gap. But you see that there's one thing that is common here. You see price got here, rejected, price got here, rejected. You see got here, and then rejected. Now, when it got here, it looks as if you should extend this support trend line, it means that it has what? Broken it. But bear in mind, even though it has broken it, it is not far away from this trend support trend line. It can actually what? Bounce back. In fact, it is actually even getting close, getting back above the what? This support trend line. So you see, so anything is bound to happen, right? So even though the market may be bullish in the course of the week, it can actually what? Be bearish for some time, which would actually what? Blow some accounts, and it will make you experience a lot of losses, losing streaks, like until your actual anticipation comes to light. And then the time that it may come may be the time that you have actually lost a lot, right? You have already lost, maybe hit your daily drawdown or weekly drawdown, and then you cannot take this trades again because you have exhausted what? Your maximum drawdowns for the week or for the day. So that's why you have to be patient and wait for the market to actually move. Sometimes you do analysis, the analysis or the setup will actually come into play when you have already lost enough, more than enough, or you don't even have enough to risk. So that is the problem that we usually what have when we are impatient in this journey. So this is what I'm saying. So for a recap, I can say that the market is very indecisive, right? Now I can't even tell you because every week after doing the analysis, I tell you my general perspective. That is what I do, even though it may not be 100% accurate, which is allowed. I understand, and I stand by it. I'm not afraid to say that. That is it. I give you a general perspective for the week. But now I'm telling you that it's very indecisive to the extent that I can't even tell you what is happening. Everything looks what? 50-50. Everything is bound to happen. So I am going to be monitoring the market until Wednesday. then I can decide to what, take massive trade. But if the market moves faster than I'm expecting, then still be joining our Telegram page, and then maybe the YouTube, IG, and then the same username for this our page is what, cmd dot aura space, cmd dot aura space. If you type this onto any of the social media platforms, you see us, and then you join this, and then we give you live updates. So thank you very much for watching. Please like and subscribe. And then if you have any problem, let us know. Please, in our video description, I have other links and other opportunities there. Please don't just watch the video. Please be reading the description and then get the information that will be helpful to you. So thank you very much. I wish you a happy trading. See you next week. Bye.